markets. Let's turn our attention now to our next guest, which is Aarthi Chandrasekaran. She's Vice President of Banks and Financial Sector Coverage for SHUAA Capital. Welcome to the show this morning. Very warm welcome to you. We've just had this conversation, obviously, about the dollar and emerging markets. Let's carry that strand through to your world, because this stronger dollar, or the renaissance of the dollar, ING, by the way, wrote a lovely note saying, curb your enthusiasm for the dollar. The momentum can't last. But translate the risk of a rising dollar, as it were, into this part of the world. It's a challenge in terms of oil, the bull and the bear, for the oil market, really, isn't it?
It is, definitely. Oil market is grappling with conflicting fundamental data, right? On one hand, you have a stronger demand. You have a supply disruption from LATAM. And on the other hand, you have crude inventories piling up last week. But fundamentals doesn't matter, does it? We saw the geopolitical risk premium being slapped up on the oil curve again. But what is more important is what's going to happen 1 week from now, obviously. And everybody is very keen to know what U.S. is going to do. Where do we have an upside to oil? I guess it depends on a lot of factors. It depends on the withdrawal, degree of withdrawal. It depends on the level of sanctions that could be reimposed on Iran. It again depends on, more importantly, depends on if EU would play along or will they just stand out and revolt.
Right. Let's connect the oil price with what we've seen in GCC economies, especially because I was speaking to at least one economist last week, and they reckon that we're going to flip from deficits to surpluses in 1 or 2 GCC countries. Are you of the same opinion?
Definitely. Oil at 70 and above is like 40% over the budgeted oil price of GCC. That would do a world of good in terms of economic growth, increased government spending, reduced government borrowings, amount of private sector sentiments will be so very positive. And like you said, the fiscal report card will be so much better than last year, especially for UAE and Kuwait. You will have a small positive fiscal surplus this year. But having said that, it's very important that countries like Oman, Bahrain and Saudi, they don't derail from the austerity measures that they have embarked on. That is very important. They should not backpedal themselves from the reform regime that they have strictly
They
initiated.
mustn't give in to that temptation, Manas.
Yeah, but it's all about whether, if the sun's shining, do you repair the roof when the sun shines? It's a bit of a cliche. Who's the strongest in terms of momentum? I mean, you see a lot of headlines from Saudi, but you know, there is this credibility gap between headline and effect. Paying your suppliers. Again, it's back. It's one of our stories that we did last week. It's not as bad as it was a couple of years ago. Who's in the league table of reform momentum for you?
Saudi is definitely in the league table, as well as UAE. Saudi has done so far everything correct, but what they have to do is also about, in terms of privatization of assets, that has to start kicking in. The numbers should start trickling down.
Is that the next leg for Mark, is the privatization?
I guess, exactly, the Aramco. That's the next big thing. And that really, a lot of people have been talking about that to happen this year, and they really have to do it.
So what else could we see in terms of austerity, though, from the Saudi government? Because one weakness that's been pointed out every once in a while is that public sector wages are so much higher than private sector wages. You're going out and privatizing various companies in your economy. You need to close that gap, don't you?
You have to, but I guess whatever they have done it right so far in terms of subsidies, in terms of increasing electricity things, in terms of expat fees. I guess everything will trickle down to the non-oil sector growth, but it's just not enough. You know, you need to give that extra push from them.
The other story that we've tracked is, of course, and you've written a little bit about it, which is SAIBOR and LIBOR. And this takes us back to dollar and back to the risks for the region in terms of the Fed. You talk about the bandwidth. It's been, what, 40 to 60 basis points, more or less, since the great financial collapse came in 2008. That's closing. Is the central bank going to get more uncomfortable, as it were, with that narrowing of that gap? Is that the biggest challenge against the structural reform, against the price of oil?
Not really. I mean, SAMA has done a phenomenal job, at least from the beginning of the year. They have done two main things. One, they've raised the repo rate, and the second thing is they have sucked all the liquidity from the commercial banks, and that has actually moved the SAIBOR up the curve, right? What is important is not to compare the current environment with the last 8 years. I think SAMA would be more comfortable with looking at a number pre-2008 financial crisis. That's when we had a higher interest rate environment, and that time the SAIBOR and LIBOR spread was averaging around 5 to 10 basis points, right? So that is a magic number that SAMA would be comfortable at.
All right, Aarthi Chandrasekaran, she is staying with us. Up next, earnings season is, of course, in full swing. How are the banks in Saudi Arabia and elsewhere in the Gulf doing? We discuss that next. This is Bloomberg. Business Flash.
Earnings season, it's in full swing. The banks and the financials are particularly in focus across the globe, in the US, Europe, and, of course, in the Middle East. Let's go through some of the big names. Aarthi Chandrasekaran, Vice President for Banks and Financial Sector Coverage at SHUAA Capital, is with us. So the Americans led the way with trading. The Europeans have buffers of capital they don't know what to do with. What's going on down here? If we break it down, let's take it back to Saudi, because we just finished the last conversation on Saudi. And you say 5 banks have reported, 3 have missed estimates, and yet you break it down. There's a steeper miss on the revenue line for you, and that's where you focus.
Okay, so 5 banks reported. Al-Rajhi was the only one to miss on the bottom line. However, on the revenue line, it's like 3 banks missed their estimates, and that's mainly because not really. It's basically because I guess the spreads have compressed more than anticipated. When I say compressed, what I meant was spreads have not come in as much as what the analyst and market was expecting. Lending growth was weak as well. If you look at the SAMA data on the first quarter, it tells you that lending growth contracted by 1% year on year. Sequentially, it has slightly improved, which is a very good sign. Not a lot, but few sectors did perform really well. But bottom line growth was robust. You're talking about an 18% year-on-year increase. That is mainly from a year-on-year spread expansion, which is a good story. So Saudi banks have done good. UAE has been phenomenal as well. If you look at the numbers, the top line numbers are like we're talking about 20% earnings growth for the UAE banks. No major surprises. Lending growth was back to the picture. Margin expansion story was very good.
Right.
We just had one bank which missed estimates, RAC Bank.
So we can learn a lot about the health of the economy by looking at bank results, of course. You can also learn a lot by looking at data. I've got some data here for you. You can pull it up on GTV Go. It shows the PMI data for Saudi Arabia specifically versus the PSO, that's basically consumer sentiment data that we had out last week as well. And you can see a little bit of a divergence happening there. What's going on? And on balance, when you look at these 2 data points, are you thinking positive growth in the Saudi economy or negative growth?
Okay, the POS basically is up 20% in March, the back of a 9 and a 4% increase, right? POS basically tells you that the social benefits and the cash handouts given by the Saudi government at the beginning of the year is making its way back to the economy, right? But PMI is totally a different story. PMI tells you it's an economic indicator of the industrial, manufacturing, and the investment activity in Saudi, and that has slipped to 51.1. And if you look at the new order, it's below 50 for the first time since 2009. What is more important? POS is great. You cannot shrug that number under the carpet, but there's only so much it could do. I mean, it will create a multiplier effect in the economy, but it will have a meaningful impact. But PMI is something which is a non-oil GDP growth. It tells you about the private sector growth, which will move the needle when it comes to economic growth. And that's, I think, which is very important and which is something investors will very keenly watch about.
In terms of, you mentioned the UAE, and you're slightly more enthusiastic than that, but you dig a little bit deeper and you talk about the Abu Dhabi Bank specifically, and perhaps if you look at the performance, are you going to see an outperformance in Abu Dhabi relative to the peers here in Dubai?
That's exactly what we are seeing. Abu Dhabi looks much more interesting in terms of investment activities come back to the picture. Lending growth is more comfortable. We have seen banks able to reprice their assets more comfortably than last year. DFM is a bit directionless. ENBD and DIB, everybody is focused on the rights issue. So fundamental is not something which would play at the moment for these 2 major banks.
I'm sorry to keep bringing it back to Saudi Arabia, but I'm very Saudi
Got a bit of a bee in our bonnet about Saudi now today.
Well, I'm just wondering, we were talking about austerity in our previous conversation. Yes. And then if you look at the banks, a lot of the banking results is tied to government investment in the economy. So looking forward, how are we going to balance the need for investment to spur the economy on versus the need to maybe be a bit more controlled when it comes to government spending?
No, they've been talking about expansionary budget. We haven't seen anything in the first 4 months. I'm just hoping the investment spending is going to kickstart sooner than later. You know, that will flow through the credit.
Do you think that will come more confidently with this with this oil price move, perhaps even, I'm not going to say floor because we don't know where the floor on oil is.
Exactly.
But do you think that gives the back half the accelerator?
True, but then you have to also understand we're going to go through a lull period. We have Ramadan and then you have a long summer, so nothing is going to happen much. So you're basically talking about the last 4 months of the year when the investment activity have to kick in.
All right, Aarthi Chandrasekaran being very patient with all our Saudi questions this morning. She is, of course, the Vice President of Banks and Financial Sector Coverage over at SHUAA.